good friend in Norman, Oklahoma, the business coach, and he says when he gets up talking about accounting, everybody eyes glaze over, but talks about profit. They're all really focused. And so we're going to talk about so I'll take a little bit of caveat here. We are working. I've worked with Daryl for a number of years for RBI reporting. That's pretty getting a lot closer to where we want to be, and so my focus with Daryl has been that we want cash tax accounting, we want fiscal year reporting for creditors and owners, and then we also want crop year reporting. So in order to get crop year reporting, and we're all crops, the livestock again, really talk about that. To get crop year reporting, we started breaking out the cost center. So the shop bills out for their work, the equipment. So maybe you call them resource, zero resource. We have equipment center. And those equipment centers are called activity centers. So activity center, let me give you an example. Equipment center is a planter or corn head, combine, whatever. The activity is combining planting. And when that activity is processed out, driven out to the crop and field and then to the marketing center. So we're talking. The challenge here is that shop is an S center, familiar with FBS accounting. The equipment is our S center. The activity or N center. So wouldn't it really be nice? We're using cost drivers to drive out the N center activity, the activities cost, not the crop. But one of the things I'd really like to have is use cost drivers. We use, like, for example, activities we're using backhoe on the tractor. We're driving if the tractor was out there planting for 10 hours in the field, that activity, that planting activity is 10 hours of planting activity is costed out to that field and crop. It'd really be nice if those same tack hours would be used to drive the equipment cost to the activity. So we're talking about an S center. S centers are they're allocated based on percent or other way, and so if I talk about things that could be improved, my perspective, that's one of the things that could happen in the future. But so you're just like a corn head. We can dump multiple years. We're using collecting hours each year and acres each year. So this particular corn head was used in this example in 2018 is 172 hours, and it was used on 2,100 acres. So lifetime, the numbers over here for those 4 years was 6,500 acres and 500 some hours. Well, in these particular years, then the costs for that particular corn head were you run a report, vendor monitor report. Everybody can see this pretty good. I don't know if you can blow that up anymore. But so we do this in a spreadsheet. I call it a cost calculator. There isn't any way in FBS to do this, but we just dump it into Excel, and so see our cost over those acres. Lifetime cost was about $7 an acre, and it was $81 an hour. So this is where it starts to get a little more interesting. We're driving these costs out on a tack hour basis, not an acre basis, but a tack hour basis. So the corn heads get driven out on out the field on it with combine, and well, I'll show you another example there a little bit. The other thing I want to show here is just depreciation. We struggled with over time. You send bought something and the CPA takes it, they'll maybe arbitrarily decide that it should be costed out over 7 years or 10 years, and the salvage is 0 or it's 50%. Sometimes you don't always know what the CPA is doing, and so we decided that we're gonna take this in-house and we're gonna make valuation judgments every year. So this number down here on the bottom then is the value of that piece of equipment at the end of every year. The depreciation is the change from the year before. So we're actually, the problem with this, one of the challenges you can see is that you use something and 2, 3, 4 years later you sell it and you've got a gain on the equipment. Well, that just means that your activity costs are wrong. And so that's disappointing that you've gone through all that exercise and your activity costs. You thought your cost was excellent for LAC. So this is the other part of this fair market value, this valuation we're doing every year is that, by the way, the balance sheet might be a little bit. Last year we added value to pickets because they're coming in at a higher value. People were telling us they were worth more than what we. There were vehicles that were getting gaining value last year. Everybody kind of understands that process yourself.
So you do a interim costing on the depreciation, or wait till the end of the year when you do the appraisal?
We set a value at the end of the year.
Yeah, so that's when you finally close out the books.
So you can do a standard cost if S Centers allowed us to do standard costs, that would be real. We can do that on the activity on the N Center. Use a standard cost, do it up at the end of the year, but can't do that.
Yeah. So one of the topics, the Farm Financial Standards many years ago, talking about intermediate assets, and that, well, breeding stock, you can flush the gain loss on the cull animals through to the work in process. What about equipment? And that's what you're talking about. It's too late. You've got misjudged it, and it just goes through the income statement.
With those gains is we've dumped them down in the non-ordinary.
Yep.
Because they're not part of operation.
Yeah.
Norm, at one time we did have gain or loss that included cost of goods sold. We just distorted.
Oh yeah. It'd be just.
Yeah, I told Daryl, well, let's just, whatever the gain or loss was, let's just toss it to that last year that piece of equipment was on. Well, it's good results.
Yeah. So no, it's a hard one. But the market value seems to be that really represents at least that equipment, not what you're replacing with.
How good a guesser you are on valuation.
Yeah.
Well, and I don't want to interrupt, but just to follow up, Randy, how do you do the appraisals? You just do it yourself, or do you have your equipment guy come out and give you a number, or what do you do?
All the above. Yeah, it's pretty easy to do with John Deere equipment. It's pretty tough to do with OEM stuff. So we've got a 8 tractor. Not a lot of market for those. So maybe we'll go back to Oxbow and that'll give us.
Randy had a valuation done 3-4 years ago. That baseline or something to fix that building baseline.
We had because of ownership issues, we had a guy come out and help value the business. He also valued equipment. Well, did do a great job on the equipment. I don't know how well it did on building stuff either, but at least it was a starter.
We got 4 partners. We all do the valuation. The average is what it's.
Sure, a little bit ago, you can see about $30 an acre, $377 an hour for planter. So here's an activity cost, and this is the end center level, and you, really, let's think about activity for a tractor perspective. We put fuel on the it's a variable cost. And then all the equipment is getting allocated up into that. So, FBS lets us to look at how many gallons per acre, labor hours per acre. This is kind of all stuff we're just pulling in from standard cost intermodal report. Maybe some of us look back with it. You can see the activity costs for running this 45-foot anhydrous rig was like here's $5.37. Then you bring in the owner, the equipment cost in at $22. So then the total activity cost with the equipment is $28. And on a per hour basis, it was $455. Now, there's pretty good disparity between years there. So why is that? Some of that may have been our transition from straight line accounting or book accounting to fair market value accounting. I'm not sure there's just a couple examples here of an anhydrous rig combining soybean running operating grain. I've said that it'd be nice to have S1, S2, because the thought pattern here is you've got 3 tractors that are same size. Wouldn't it be nice to know what the average was of those 3 tractors same size? So that's the S1, S2 concept. N1, N2 concept is you've got a grain cart and a head and a combine, and lumping all those together, you're combining soybeans. So the soybean, the N2 would be combining soybean, the harvest process of lumping all those together.
Maybe you need to explain S1, S2, N1, N2.
Well,
I know what you're talking about.
So this is S centers are the equipment centers. So if we had, let's say we've got 300 horsepower tractors, and each one of them is an S center because that's how we're tractor A, B, and C. We're keeping the cost of each one of those tractors. But they're all the same. So would you like to know what the average cost is? Maybe one, for whatever reason, is higher cost than the other, but how does that fare to the activity? Or if just for whatever reason, you'd like to know what the average, you're going to charge out the average cost of owning those 300 horsepower tractors to the activity, but you still want to keep track of the individual costs. So that's the S1, S2 concept. I don't know if there's very many people within FBS that are using that concept, but there is a way of doing that within FBS to have an S2. There is the N1, N2 concept of understanding, like if you have a grain cart, a combine, header, all those combined are separate activities, but if you want to roll up it together into a harvesting activity, then that would be the opportunity for an N2 kind of activity.
Randy, you do a lot of custom for people, right? So knowing what it costs you really helps you know how to price your service.
Well, I think it's important for everybody, but yeah, it's really important for us. So
Really what you do. Have you had some surprises over the years of what things were costing you different than you expected?
well, let me show you. So go ahead.
Walk right
Need
into
a-
it.
Thank you for
Mr.
that.
Some music.
Go to the next one here. And here's just some examples. What do we have? Combining. This must be this is corn field. So each individual field they see is about $46, $50, $55. It kind of range because we're charging out equipment on a variable basis. Size of the field, all those things impact what the cost is. You know, you may say, well, my costs are this, and I'm just, maybe from a budgeting perspective, you might say my cost is $50 an acre for harvesting corn, but when it, here's the reality is, from our accounting system, it's telling us that some fields are just more expensive.
How are you collecting that hour, Dave?
Well, let me show you that. You're great, at it, though. Thank you. Let's go on to the next one. I'll answer it on the last one. So your question about variability. Here's a 16-row planter, and we got various size planters because of the seed production. So this, but we also use them on grain. So this 16-row planter was used on corn. And so these are the fields that were used that year, the different field sizes. So we got two bigger than maybe what I used to. So we're running from a 17-acre field up to a 110-acre field. This is the hours that took the plant at acres per hour. So you can see it went from, I don't know if you can see it or not, but we're.
Can't see it.
Okay, so I'm gonna tell you it's about 10 acres per hour on this field. It went up to 21 acres per hour on this field. So at $590 an hour, the range in per acre is from below $27 an acre up to $55 an acre. Just because of, I mean, you'll find out pretty quick that a half section is a lot more efficient to farm than a full 48.
You don't think Ritter would like that knowledge? There's one.
But, I mean, this is FBS, it's an operation for you. If you do your accounting, like we do our accounting, you just run an operations report, and this all comes right out of that.
Okay, I have a question then. So this, as long as we've entered all the info, you can just produce this about half that yes. Some of those others, you have to pull the data into Excel and manipulate it in some way.
Well, the reason, on those equipment, those cost centers are dumped in Excel, just like, do the divider over on the right side, 110 dollar cost per acre per hour. It's not a report we have. Yes, we'll be able to run it in Power BI. To get there, but it's not something we'll have to dump over again.
But everything comes out of that.
Well, everything other than the hours related to the.
Yeah, well, yeah, we'll have to input our acres and the FBS once we're in there. They drive the activity. So if you think about it, we're using tack hours to drive our activity costs. That's input in there, and FBS does.
The activities all come from FBS. The cost of the equipment cost activities, those are not. Those
Yeah,
have to be
that's
outside.
the calculation.
So are your operators at that, when they finish the field, are they entering something in the app? Or are they recording it in a notebook and take data entry?
Well, let's go to the last sheet. One more sheet. So this is, I'm going to answer Bernard's question and your question all at the same time. We, Daryl's helped the gals in our office, Microsoft Power apps. And this is one that Andy in our office has created. So the guys were in their truck, they get the scale ticket, they plug in the scale ticket. BC truck number 2 was hauling beans, it had 985 bushel on the load. They'll plug in the gross and the fair, but that doesn't show on his tab. And 12.2 moisture. This is an app on their phone that we can see. So there's this is a 7,500 bushel contract, and there's 23,000 bushel left delivered. You can see right on there how many bushels are left, they can see that on the phone. We, I would like to really go to the point where they could do this and like tack hours off the tractor, we're not there. I mean, this just seems like we don't have that app built yet, but we're collecting scale tickets for right on their app, and so that everybody that's got an app can see how much is left to finish the contract, how much is been with. I would like to get to the point where we could also do that. And I'll be kind of the same boat with Bernard. We can pull that out of John Deere office. There's errors that happen. And also the other point is, not all the equipment, John Deere equipment. So, you know, I like the idea, it seems really rational to be able to pull it out of John Deere, but just not gonna work for everything. So that's about the questions.
I had a couple of questions. Just really interested. You're tracking hours, checking everybody's hours, because you were assigning the shop hours on a particular job on a sheet. I'm curious, you know, we talked about the global reconciliation of mattresses, whatever. Well, do you reconcile your labor hours? In other words, you have 6 employees, and they have 2,000 hours a year, that's 12,000 hours of labor paid for. Do you have 12,000 hours of labor assigned, or how do you reconcile?
So they write on their time card what their activity is on an hour. If they work 8 hours, there's 8 hours that's written down. And so we do that costing right in the pay, and it's center point down.
Does that come into your centers then? Same thing, same question on fuel. How far off are you?
Well, we got a notebook out by the fuel tank, or wherever the fuel tanks are, there's a sheet that records how much fuel they use, and they write down what a piece of equipment went into. So there's going to be a little bit of calibration issue with the pump, but pretty much what they're writing, what the meter says, that's what they're writing down. There'll be once in a great while where somebody doesn't write something down. Yeah, ladies in the office to get trying to figure out didn't write what down, but otherwise it's.
Well, I didn't know if, like, at the end of the year, if you bought 75,000 gallons of diesel, if you had all your records, how far off the two ends?
They're pretty well spot on, because we're reconciling that every week.
So you're doing it every time.
There's a log sheet, log right by the fuel tank. If one of the portable tanks, whatever thing goes out, there's a sheet that's so every time somebody uses something, they're right within the log sheet. Wouldn't that be nice? They could do it on their phone.
But you reconcile that back to the meter on the pump. Somebody actually has the job of, I mean, what do you reconcile that to?
Well, it's inventory and FBS. We bought 10,000 gallons that have to apply to that comes out pretty close to going have to do much of it will adjust.
Yeah, I don't recall making big investments for the timing issue purposes of always do the next time I don't recall doing it.
You don't recall any adjustments?
Well, it's not any. I know there's been 4 or 5 years before I know it's huge. It's not. I don't even see, honestly, I don't even see it now.
They're not much. If you, because you're tracking what the meter says now, there's the calibration issue. Tracking what the meter says. Somebody forgot to write something down, then you'll just have to put in an adjustment.
Our problem with big people was just, was right.
Well,
Written records, that's what we found. Any of them have.
and, you have to develop the culture. I mean, that's the challenge, and I think for our folks, our folks, been pretty within compliant to that. The challenge we got is that we got new people coming in to help seed them all, and they get it right. They don't get, report tax hours and task. Get some college kids that come. Well, that's up to the leadership to make sure they're doing that, but sometimes, they just gotta go back. And make that stuff. It's pretty. So that's-
University of Nebraska student, right?
Make anything. It's called an educated guess.
Reconcile, yes.
Yeah.
So the tractor operator then, he writes down the hours when he's either leaving the field or getting to the field.
So we've got a logbook that needs to track.
Right, so that when he's got 25 miles of road time, is that charged to the previous field or the next field? And like, I don't even want to know how many hours we get calibration of a sprayer or something sitting in the barnyard. You guys have a center then that's just a overhead.
So that's part of the app. They're cleaning, calibrating, whatever they're doing. That's part of that activity. If it's in the shop in repair, that's there. Cleaning, washing, calibrating.
But as far as charging to a field,
All the activity costs, what's different now by actual hours. Do you think, all during that season, your labor costs, cleaning, washing, whatever is pinned up at that center, by the time that season is over, that $10,000-$20,000 of cost in that center, but it's, cost there, or, so it all works out. Got an activity cost total that's got to be applied. Yeah.
I think you started to explain this a little bit, but for someone who were the ask and ends, and like equipment centers, but I guess can you explain that a little bit more? And then the kind of follow-up question, how did you get to here? Because for someone like, I'm coming in trying to wrap my head around where our FBS setup is.
Yeah.
It's like, okay, that's great, but I don't know how to, I want to get there, but how do I get there?
Well, let me answer your second one first. You need somebody to help.
I'm getting that.
And the FBS will allow you, first I got started with FBS for several years, going back, leading up the first year. Wanted that information, this is my budget. So go back and do that, but yeah, I like Norm, and there was, we had another gentleman that helped us set up. You really have to start mapping stuff out center wise, like ours is shop has been getting, they're doing repairs on equipment processed out to do activities and activities driven out to the process fields. That marketing centers with you take somebody to or John or Daryl or the one to make sure you're kind of putting that set up right for the challenge. Okay, so
That's it, and so
well, that center is just the terminology within FBS. The type of center. Equipment damage. That center is in the overhead, there's a whole hat table, it's an allocation table, so it's where the setup is for driving S center you can decide that you want to cost out this piece of equipment, 10% to corn and 90% for, 90% some other crop. You can do that. Come back and after change that. Something, if you decide that, you go look at all the acres, do that, fill up all the acres that was used, that piece of equipment used on that field, on a particular preference, I don't want. And then your percentage of hours is 10%, 90%, then you go back and fill that. It's a little complicated. It would be nice for the cost driver idea would be like you do in end centers. It'd be nice to do that in this. I'll put that back to the product
Yeah,
committee.
that's right. Product committee take that on. That'll be a,
I do have one last question, Randy, and that goes back to the question back here, something to what you're saying. He asked about travel. You see, that goes to the activity. Well, but you, go ahead.
Well, all right, I can ask you a question because I was.
Well, you showed the classified food. So my question is, did you just pull out the travel time, or how did you had it by field and yet you allocated the hours to the activity? How did you do it?
So I could visualize at least two different ways of doing that. You can think about it from the billable and non-billable kind of way, and I think that's a way to probably fill it. But what we got started a long time ago was we just kind of operators do it a little bit different. But when you finish the field, you got to start and stop out that time. So whatever the stop was from the previous field is the start for the next. Well, there is no slippage in there. Sometimes the ending time for a field might be when they got done. It might be halfway between this field and that field. It can be a little bit.
So if there's we've got two fields close together and two fields far apart, you're going to get a little.
You can. Yeah. Historically, if I was doing it, I would have tried to split. You know, it takes 3 times an hour to drive between the two fields. It's a lot for us. Okay, I'm going to take it. Very good. Last burning question, anybody? Thank you.
good.